We know that BHP is a money-making machine with iron ore at these current levels. It wants to go and pivot though. It wants to become more clean and green like many of the other big miners as well. Do you think it will go and successfully pull that off?
We think so because obviously they're in the process of divesting all their fossil fuel assets. One of the things they try to achieve is, in the next 2 to 3 months, actually in the next 3 months, they're going to divest their petroleum business to Woodside. So as a result, upon the Woodside shareholder approval, the BHP shareholder will receive in species distribution of Woodside shares. The importance of that is, when BHP talk to us, a lot of European funds, they don't talk to them because of the ESG profile. But by divesting significant amount of the fossil fuel assets, that will become more investable to the world of manager. So I think this is a good move, despite the fact that the oil is bounced back tremendously from recent low. But in long term, I think it's important to look at where the money is flowing.
And of course, BHP has made moves into potash, nickel, so it is more diversified than just being an iron ore play.
Exactly, and fertilizer, is certainly one thing they look at when they, present to us. And I guess with BHP, it's important to look at, the thing they have at the moment and how they're going to transform themselves. And they do have a concrete plan in front of us. For now, shareholders, likely to enjoy the windfall from iron ore, but the iron ore price, of course, it won't, it wouldn't stay at the current elevated level. There could be some sort of, correction down the track. However, they have a strong balance sheet to weather that.
Speaking of balance sheets, what do you think the plan, the outlook is when it comes to dividends? Because we know that it's been paying out very, very hefty dividends at the moment, very, very high yielding. What does the future hold in that sense? Can they be sustained? Because a lot of people have been warning that buying for income is going to be fraught with danger.
Yeah, this is a very good point. That reminds me of the old Cinefex. Before it, gone downhill, they're on 10% dividend yield. The way we look at BHP is how sustainable they are. They got virtually no debt, and the way they look at is they will pay out a portion of their earnings in dividend. So of course, if we look at the FY23, the dividend yield is 7.5%, look very attractive. However, when the iron ore price gone down, we surely expect a far lower dividend yield. However, they're still quite attractive, in the range of 45%. For investors who want to hold the commodity through the cycle, BHP remain one of the stocks they should consider.
Well, whenever we put up the iron ore majors, it's BHP, Rio and Fortescue. So is it BHP shooting the lights out? You don't hold the other two in the same regard?
Yeah, a lot of talk about the Fortescue being a better choice for iron ore. However, we do want to look beyond the current boom of iron ore, and as with the mix of iron ore revenue, a bit over 50% is from iron ore for BHP. However, significant more for Rio Tinto. So if we look through the cycle, I think BHP is more diversified and look more into the future and give me a bit more peace of mind when we try to maintain the resources exposure. And the other thing, of course, back to the good old days, resources used to be the biggest sector, in ASX. If I purely look at the trend of the current account surplus we have at the moment, looks like we are coming back to that. Yeah. So if that be the case, holding BHP being the biggest stocks will provide us with the biggest liquidity.